you can make clear and concise sense of this to one of your fellow Nexans today. So thank you for coming over and welcome.
Absolutely. Thank you so much for that introduction, Karen. I appreciate that. Yeah, I love this product. You hear no ratio popping up a lot, but that's primarily for investment properties. This is not an investment property loan. This is not a DSCR where we're not using rental income. This is actually for the purchase of a primary residence or even a second home, but it is a true no ratio loan in that our clients do not have to provide employment nor income, nor do they have to have either one even listed on the application. So it's a great product for, say, someone who's a self-employed borrower moving from one area to another, or and so they're market specific, and so they're not going to be able to, have an immediate income, and underwriter's going to say, nope, don't like it, they're moving, we can't use any of the income they've made before. This is a great product for that transplanting self-employed borrower whose, again, business is area specific. It's a great product for them because as long as they have enough of a down payment, which is typically 20%, and they have at least 12 months of reserves, that's the strength of this product. Credit score needs to be decent for that loan to value, but they'll go all the way down to a 660 credit score with this product. And so as long as you got to have some assets, right? You got to have the 20% down payment, and you got to have, again, the 12 months of reserves, and you got to have funds for the closing cost. But as long as you have that and your credit score is good enough, you can get this loan. It's also great for people that might be making money from sources that aren't allowable, like cannabis income, right? Some states allow it, some states don't. If you're in a state that does not allow cannabis income and that's a source of your income, this might be a program for you. If you are a real estate investor, let's say you sold some homes last year and you made a whole bunch of money last year, and this year you're nowhere near on pace to match what you made last year because you don't have to, right? But you technically have declining income. Underwriters don't like declining income, so they say, no, we're not gonna lend you on our traditional products. This might be a perfect product for your real estate investor who's looking to buy a primary residence or a vacation home. Caveat on that vacation home is it's not going to be rented, right? That's an investment property. If it's going to be rented one day out of the year, that's an investment property. But if it's truly a second home, vacation home, then they can use this product to buy a second home as well. So it's a great product for the right client who maybe has a hard time proving income, or maybe they've had a very creative tax preparer and they write out.
First thing I thought of was crypto.
And crypto, that's right. Crypto is another one. A lot of people making money off of crypto. A lot of traditional lenders won't allow any type of cryptocurrency income at all. Right. This might be a perfect product for them because they got tons of assets, right? They've got the 20% down, and they've got the reserves, and they have the closing cost. They just can't provide usable or allowable income. Great product for them as well. And I've got a little flyer I could share here. Let me pull that up, but go ahead and ask a question.
Now with something like this, what about, since they do have to have so much money down, or well, you're 20% down and your reserves, do they allow gifts?
They will allow gifts for the down payment. You just have to have enough of your own money for the reserves and closing costs. Believe that or not.
Okay. With 2 months seasoning, I'm assuming.
Yes, 2 months seasoning. Yes, 2 months seasoning. There was a time when it was 1 month, but they moved it back out to 2 months. So that's why I paused. But yes, 2 months seasoning on assets. You got it. It's pretty standard.
So to our realtor partners, these are all questions that you can ask ahead of time. Okay, if you do have a potential buyer or someone who is wanting to sell their home and buy in another state. I know now that COVID is over, a lot of people are going back from being self-employed to working for an employer. That doesn't always necessarily happen in the same state. So these are all questions that you can ask, so they're not just kind of left with no options. We can always help them in that regard. What helped? This is starting to make sense, David. So thank you. Not that I'm going to remember any of it, but I know I have you close. So what else can you share with us?
I have a flyer that breaks out some of the bullet points that I can put into the chat, so any of our realtor partners can download that and refer to it. and then connect with your NEXA loan officer anytime you'd like to use the product. It is directly through us that we can give you access to the program. But I'd love to upload a flyer into the chat that gives some main bullet points if that would be helpful.
Yeah, I'd love it.
Got it.
And don't forget, you guys can get this into a co-marketing piece if you get with your next loan officer and we get into marketing. They can have that done for you pretty quick.
It is, I apologize, it is not letting me put this in the chat. I'm going to guess it's because I may not have host or co-host.
You may not have co-host. Mia, can we take care of that for Dan? There you
David.
go.
Awesome.
So far, do we have any questions on this?
It's actually not letting me throw it in this, so I'm going to see if I can.
Maybe
Either that or you can-
maybe send it to Mia
Yep.
Yeah,
or the Google chat.
You got it. I'll do that. It's a great tool. That's why I really recommend you guys have it. But yeah, here we go.
right.
I've
Just
actually
another
used it a
tool.
couple different times on different borrowers, and you know, it's a great program, really. You know, it takes me back to you know, the subprime days of stated income, with the exception that we're not actually stating any income. We're, you know, which you don't even list employment. I mean, that whole thing is just blank. And
Right. It's not even in there.
yeah.
And it's, you know, I know what you mean by the stated, you know, income or the non, you know, the NINA, the no income, no asset. This is not a NINA. It's a no income, no employment, but it's absolutely asset strong. And you got to have a decent FICO. And if you got a lower credit score, that down payment's going to increase. Just keep that in mind. So you got more money, you know, got more skin in the game. And that's what makes the lender more, you know, more likely, more willing to offer this product. But it is asset heavy. And that's where it offsets a lot of the risk compared to the NINAs of old, the no income, no asset loans of old. It's a more responsible loan is what I'm saying.
Can you do less down if you have a higher credit score?
The 80% is the minimum with the higher credit score. So
Okay.
as the form says, it says that up to an 80% loan to value with the 720 credit score and 12 months reserves. So 720 and above, that's where you're going to get the 80% LTV. If you're below that, then it's going to start to increase the down payment requirements down to a 660. But you can't go down to a 660. You're just going to need a 30% down at that point.
Right. Which, I mean, people pretty much know where they are with their credit.
And
I don't
most
know
of the
if
people
that- especially-
yeah.
Yeah.
Go ahead.
No, I mean, if they're looking to do an investment property or, you know, typically they're more savvy about where they are with their credit. So, I mean, for them to be prepared, which again, I think that's a conversation that can be had with the real estate agent. That's going to be a much more intimate conversation than what they have with us.
Absolutely. And we'll give them, you know, the loan officers can give the guidance on the program directly. And of course, we can communicate with both our realtor partner as well as a client, let them know what's needed, set those expectations. This flyer really helps set expectations. If it's updated, then, you know, the loan officer needs to make sure we get that to our realtor partner as there are changes made. But this has been out since February. I don't expect any recent changes for this year. Any upcoming changes for this year. So this should be good, pretty much, at least through the summer would be my expectation that these parameters and these guidelines would be good to go and would go and change. The non-QM side, you know, it's a little bit more fluid, a little bit more flexible on guideline changes and things like that. You know, if something starts to not work, they'll make an immediate change. They don't have to go through the bureaucracy that maybe Freddie, Fannie, and Jenny have to go through. They could just make that change. But they won't do that unless they see an issue, and they're very careful about what they set up. So I would expect that these guidelines will be in place for quite some time, especially since they just came out with an update in February.
Okay, and I'm going to ask the question. It's the
Uh-oh.
question that every loan officer hates. Since this is a non-QM product, what do you think about the rates?
The rates are higher. They're higher, but they're not in the double digits. So we're still below double digits. But beggars can't be choosers, right? The fact that they can get a program to use to buy, say, you know, with whatever their situation might be, it's strong. Just having that ability. And obviously, the higher the FICO, the lower the pricing is going to be. Again, we're below double digits, so it's not in the commercial range. It's still primary residence, high eights, low nines. But you can get you can get 80% financing. That's kind of without having to prove any employment or income.
Here's always one of my replies to that is you can either pay Uncle Sam or you can pay the lender. You can't really have it both ways.
No, you can't.
Right.
I unfortunately have to pay Uncle Sam.
All good.
That's so true.
Others out there that are 1099 and write everything off, they get to pay the lender.
And keep in mind, for most people who are doing write-offs, they get to write off the interest that they're paying. So if the interest is a little bit higher, it's just a little bit more of a write-off. And when you look at that difference, just like you said, Dan, when you look at the difference in the payment, people get so locked on a specific rate. Look at the difference in the payment between that rate you think that it should be at versus the rate where it's at. The difference is always so much less than people realize. And if you take that number and multiply it by, let's say it's 2 years before rates come down and you can refinance into a lower rate, right? Or even just 1 year, because after 1 year, let's say, okay, now my business is established. I'm able to show this income, and I can show that my business is doing well. Well, now I can refinance into a lower rate. How much did you pay in interest rate difference for that 1 year versus what you would have to pay if you claimed all of your income and paid a ton of taxes on all that income? I'm gonna bet money that you paid a whole lot less in the interest rate difference than you did on paying taxes for additional income that you filed just so you qualify for more house or a slightly lower interest rate. Now you're better off, go with this program, refinance down the road. When that state finally begins to allow cannabis income, then you can refinance if you're a cannabis income earner, right? Or if the mindset changes on Bitcoin, which looks like it's starting to do, that changes on Bitcoin, more and more lenders are allowing that type of income. Boom, you refinance into a conventional product. Until then, this is your product to get you into a home. So that way you can enjoy that appreciation that's going to happen. People that are waiting 2 years for rates to come down, number one, there's no promise rates are going to come down. But I can tell you this, that home is likely to appreciate, very likely to appreciate. And even with rates as high as they've come up since 2 years ago, homes are still appreciating. The value's still going up. So regardless of what interest rate you're paying for a home, you've got to take that appreciation into account as well. And what that home's how much value you're going to lose in 2 years versus how much are you going to save in interest if you wait 2 years for a little bit better rate. Buy now and refinance when the rates come down versus waiting to buy and lose out on all of that potential appreciation over the time.
Yeah.
My 2 cents.
No, I love
Your
that
2
because
cents is valuable, by the way.
yes, it's very valuable. And
1901 Buffalo
there's even
pennies.
creatives out there that people are providing to our buyers that are scared, like the cost of waiting. It's huge. It's huge. And most home right now, anyways, I know in the areas that I'm looking at and that my team are working in, the homes are appreciating at a non-traditional rate. Okay, it's not just the average 2%. We're working in some areas where the average home appreciation is like 5.6. It's like, whoa, that's huge. So when you start adding those numbers up, this could really make a huge difference in your generational wealth, which most real estate is.
Absolutely. I couldn't agree with you more. Nailed it,
Yeah.
Karen.
Yeah, so don't wait. Get on that horn, log into loan officer support. You just heard it right here. There's rebuttals for everything. Okay. And if you see the value in somebody putting their house on the market or somebody, making that purchase, if they're just kind of waiting for the perfect moment, that's not going to happen. The perfect moment is now, right, guys?
Took the words right out of my mouth. I was going to say that that's the best time to buy was yesterday. The second best time to buy is now, because that appreciation is going to continue to grow. We learned our lesson from 2008, and back then, if people would have just held on to their homes, it would have come back around. People just didn't. They walked away. But we've learned our lesson from that time frame. Just hold on to the house. The values are going to come back up, even if they go flat. They're going to start going back up. And a lot of times after a flat time, boom, they rocket up. Right now, we're enjoying soaring increases in value. Like you said, it's more than double the normal appreciation that you see in most markets. So buy now, enjoy that appreciation. The rate is still not that high compared to where it was, some time periods in the 80s and the 90s. I laugh at people that say, yeah, I bought a house with double digit rates. You know, what's the big deal? I love these rates that are closer to 5 than they are to 10, you know, and then we
Yeah.
still have that many conventional products. Some of these unconventional non-QM products, we still have rates that aren't even in the double digits. And so, like I said, do the math. What's the difference between this higher rate and a lower rate versus waiting to try to get a low rate or refinancing into a low rate later? Take that into consideration. And like you said, the best time to buy is now.
Absolutely. So we do have a couple questions. Let's see here. Jackie. So if I have a client moving from California to Tennessee, they could use this program if they qualify?
Yes, they sure can. So if they are self-employed and they've got a job, or they're going somewhere and they don't have employment lined up yet, right? That happens too. As long as they have the assets, they can do so. Absolutely. Credit and assets, they can make that move without a job being lined up yet, or without reestablishing a self-employment business if they're self-employed. Yes, this product is for them.
And with that money needing to be seasoned for 2 months, to do any kind of transition like that, you're going to be looking at a month anyways. Just
At
to move.
least. Yep,
Just
at
to
least.
move. I
And
moved
if
from
it's
New York to Nevada, and it took me a solid month. It was like my full-time job for a month.
and if the
So,
funds are coming from a sale of a property, you got that time frame there as well. Just
mhm.
this can make life so much easier where you don't have to wait to be in the market, get things established there first, rent something for a month or 2 or 3, and then buy a house. No, just do this product, and a year later, go ahead and refinance into lower rates if you have access to that.
Okay, and Jackie had another question. So those reserves, would they include the principal, interest, taxes, the pity?
It is the
Does it
full
include
pity
all
payment.
the?
Yeah. It's the
Okay,
full
full.
monthly payment. So if there's HOA, that needs to come into account as well. So PITI and HOA, there's no mortgage insurance because it's a minimum 20% down. But PITI and HOA come into play. Multiply that by 12, and that's your reserves needed after your down payment and closing costs.
Jackie, I hope that answered your question. Any other questions? God, this is
Give us just a
wonderful.
sec on that flyer. Me is modifying it to remove all the lender information.
Oh, good. Awesome. Awesome. Awesome.
We don't want to give away our secrets,
Not all of them.
No.
Not in one
This
session.
this requires our lending partners to, or our realtor partners to get with their NEXA loan officer.
We will open the door for you.
Yes, absolutely. Awesome. All right, Jackie.
Mia,
Good.
that looks great. Go ahead and post it.
All right, so that creative is in the chat. And we'll give everybody a minute just to kind of get that downloaded. And gosh, David, this is just getting better and better the more you talk about it.
It's a great
So,
product. I grabbed onto it
yeah.
a few years back. I helped a gentleman whose primary source of income was from Bitcoin. And so it wasn't really usable anywhere else. He was doing a $1.4 million purchase. We did the 20% down, and we were able to pretty smoothly get through everything. And it took about 35 days, just because there were some pieces to it that he was trying to wrestle with me on, but he finally acquiesced and got it over to me, and we submitted everything. Part of it was the percentage of ownership and some things, but we were able to get it done and get them closed, and they're happy. They're in without any employment or income being listed at all.
So incredible. That is so incredible. Well, great job. Does anyone else have any questions before we wrap this up today?
Mia, were you able to get that into the chat?
For a while, then sending it now.
Okay.
Oh, I thought it was already in there. My apologies, guys.
It's okay.
So with
Mia's a
that one
wizard,
last,
so we gotta give her a little time.
I'm just so used to Mia, like you ask her something, it's like poof, done.
Already
So
Hey, this was short and sweet, that's the way I like to try to, disseminate information, short, sweet, to the point, give you what you need, and then we'll go from there. So we might have been a little bit, of course, Dan did ask her at the last second to make those changes. It's all
Yeah.
good, but there it
All
is. There
good,
it
all
is.
good.
Yeah.
It's there
It's
though.
in
See what
there.
I mean? It's like poof, done. That's why I love it. I'm a little jealous that she assists Dan and not me. So one last question. One of the things that I picked up on, you said it took you about 35 days to get from point A to the closing table.
Closing, yeah.
Okay. Is that normal?
It can be done in 30 days or less. Absolutely. We had a little bit of a hiccup on this one, and that's the only reason it took a little bit more time. We needed to actually make some changes on the file itself and do a resub. We ended up doing a resub. But we were able to get it done even with the resub in only 35 days total.
Wow. That's incredible.
I mean, keep in mind, there's just not a whole lot to it, right? They look at the assets, confirm the assets. There's no employment to verify, income to confirm. So that those pieces are easier. The appraisal for that one took a little bit longer. So that was another part of it, but we ordered it right off the bat. But it was a new build. So there were some issues with that because it was a new build. It wasn't complete, but we were able to get it done. Even with all those changes, it was still done in 35 days. So your standard turn time on these is going to be closer to 30 days or less. Barring any unique issues like the home not being done yet. that slowed things down a little bit, needing a re-inspect at the end, and they did multiple upgrades after the fact, so that changed things as well. So I guess people buying $1.4 million homes do that, but I'm kidding, everyone does that. But we were able to get it done. It was abnormal things, and it was still done fairly quickly. So
Yeah,
I would
35
expect 30
days is that's super quick. That's super quick.
Not too shabby.
Jackie has another question. Are there any restrictions on the type of home that they'll work with?
No manufactured homes. So this product's not going to work for manufactured homes. So your typical single family residence, you're not going to buy anything that's it's a 1 unit, right? There's no 2, 3, or 4 units allowed on this product. There are some restrictions on value for the amount of acreage that the property might be on. So they're not going to give you value for anything over. And I apologize, I don't know the exact number of acres because it just has to come up. Usually it's 10 acres. That's that would be my default, would be 10 acres. You can't do anything.
Only reason I know that is because I recently had to ask the question.
Okay. Well, there you go. So it's the standard 10 acres. Anything over 10 acres, you're not going to get value for. But 10 acres plus the dwelling is what they'll give you value for.
Okay. Wonderful. Wonderful. Jackie, thank you. Jackie's just all over this. I love it. She's got some questions.
Sure. Right.
Right? That's what we love. We love to answer the questions that are on people's minds. I could babble for days. These guys just roll their eyes at me. But we want to know what you want to know. We want to know what you want to know. So, if there's no other questions, we are at 10:27. We definitely want to respect David's time because he is a busy guy. We love how busy he is. But we don't have any other questions. One last chance. Everybody get the creative. Jackie, I'm so happy you're excited about this program. I am too. It makes so much more sense. So I can't wait to start marketing it through the BDM team. So, all right. I guess that's it. David, thank you so much.
My pleasure. I look forward to being back here again with sharing about other products.
Yeah.
And on time next time. I tried to be on time. I really did. I took a wrong turn, basically. If that makes sense in Zoom, I took a wrong turn. But I got back on track. I GPS'd it. I got back here on time.
There you go. Perfect. We love it. Mia, what do we have next week?
We'll be having P&L loans with Ashley O'Neill.
Awesome. Okay. More tools for your toolbox. So Dan, I will let you close us out.
Putting pressure on me now, aren't you? That little saying. All right, folks. Thanks again. David, thank you for your time. We know it's valuable. Thanks everybody for coming in. Hopefully you picked up a little nugget or 6. And we will see you next week at the same bat time on the same bat channel. I do that just
Thanks, everybody.